All right, guys, we are here today. It is day 2 of this big volatility that we got from, the AI news. All right. Whew. All right, guys, day 2. Nvidia falling down some more. It's still at 120s. Gapped up a little bit to kind of save the day after dropping all the way down under 120, down to 116s, 117s yesterday during market hours. It gapped up a little bit today and then is pulling back some now. Gold is down over the last 2 days. The nasdaq is obviously down over the last few days following all of this. And this is on the heels of tomorrow's Fed meeting. Thursday's GDP data, Friday's PCE data, Wednesday's Microsoft, Tesla, and Meta earnings, Thursday's Apple earnings, and more. So just be ready, guys. We got a lot of volatility coming the next couple days around all this economic releases and stuff that's dropping. So just be ready, guys. Be prepared for all this stuff because it's coming tomorrow, starting tomorrow. So y'all just be ready. It's genuinely like ridiculously volatile stuff coming. Hey, what's up, Goose, Harris, Nathan, Pawn, ER, Ray, Faye, Viral. There's no Fed report today. No, there's durable good orders. We're going to cover the durable good orders report coming out live. We got Case-Shiller House Price Index at 9. We got CB Consumer Confidence at 10. These are not like crazy big reports, but they're relevant nonetheless. Like, we'll still pay attention to them, but they're not like huge reports or anything. They're not market influencing reports, really. They might influence it a little bit. I don't know. So we're also kind of looking at Apple here. Look at Apple start to bounce back. Apple went red for the day. Apple had a big rebound yesterday, despite a lot of other stuff not rebounding at all. Yeah, interesting. There we go. Let's do a poll here. Over the next 4 days, does the market rebound or continue down? Rebound. Continues down. Vote on that poll. Yeah, but the NASDAQ is kind of correcting back down. You can kind of see a better look at the NASDAQ if we put like a 15-day chart up, maybe like a 1-hour chart. You can kind of see how significant this drop was from the news yesterday. Yeah, so covering some news this morning here. Let me stay on it. All right, so as of today, stocks are showing signs of recovery following that big sell-off in the previous session, according to a lot of outlets here. Futures tied to the NASDAQ have gone up almost 0.6%. S&P futures increased about 0.3%. Nvidia, after a 17% drop on Monday, rebounded by 5% in pre-market. AVGO has recovered about 4% pre-market following a big drop in the prior session as well. Oracle has gone up about 3% in pre-market after big trading losses in the previous day. DeepSeek's AI model, the initial market downturn was triggered by concerns over this Chinese AI firm DeepSeek's new AI model, which essentially said that they can build AI systems cheaper with less need for powerful chips. Right, this made a lot of chip companies drop because it looked like they might be not obsolete, but rendered more obsolete. This development raised fears about increased competition for U.S. tech companies and all that stuff. And again, Wednesday we got the FOMC meeting. They're set to announce a pause. We don't know exactly, but they're probably going to pause rates Wednesday. Big earnings from Microsoft, Meta, Apple, Tesla, all coming out the next 3 days. Those are huge as well. Traders are basically watching for that. And then today we have the durable good orders report. They're expected at 0.5%, 0.5%. $50 or less a share. I don't know about that. Let me see. I mean, we could use some fundamental analysis tricks to look at it. Let's take a look at it. All right, hold on. Let me look this. So, Nvidia. Let's take a look. Let's look at their calendar. So if you look at their EPS, their trailing yearly EPS, let's see where it's at. All right, so they're expecting on February 26th, they're expecting 81-cent EPS. Or no, they showed 81 cents. Okay, so let's check their PE ratio for Nvidia here. All right, so Nvidia down to 120s. If we calculate 81s plus 68s plus 61s plus 52s, gives them about 262 yearly EPS. 262, 121 divided by 262 gives it a PE ratio of about 46. That's not really that bad for Nvidia. That's pretty normal. I mean, a good PE ratio is like 30, so it's above average for sure. But it's not like you take a look at some of these other companies; they're gonna have PE ratios of like 80, 90, 100. And so, in terms of like fundamental where it should be in price, I don't think it's at a terrible spot. You know. Just in terms of its price to earnings ratio is what this is. It gives it a 46. That's not bad. There's only been one time. I don't know if that's true. Let me. I gotta look it up. I mean, yesterday we dropped not that percentage-wise in the NASDAQ. What was it? Let me see. Like, if I start to look at the percentages here, Q dropped from about 533s down to 5s. We'll call it 502. And that's an exaggerated one. So yeah, this is less than a 6% drop. Dude, there's definitely been at least a 5 or 6% drop. That's not true. Yeah, just to give some understanding here. Yeah, dude, there's been lots of drops. Yeah, there's been several Again, the 5-6% drop's not big. The biggest drop was probably at Nvidia, and you know. Catch it up after vacation. What's up, Maria? My opinion, market will bounce on Nvidia earnings. Maybe. Nvidia earnings are late February, though. So we still got some time before Nvidia earnings release, right? Like, Nvidia earnings usually come out later. So we got time. You know, this is a less than 6% drop. It's not, you know, you could call it a correction, but a correction typically is over 10%. Yeah, like, just to put this into perspective, guys, like, I can list... Okay, so here's a bunch of them. In 1987 on Black Monday, the Dow Jones fell 23%. Yesterday we only dropped 6%. The dot-com bubble, we fell over 10% in the initial drop. Again, today we fell like 5.5%. After 9/11, we dropped 7%, over 7%. Again, today we didn't hit that. In September of 08, we fell 7%. October 9th, we fell 7%. October 15th, we fell 8%. December 1st, we fell 8%, all over what we dropped yesterday. In 2011, we fell 5.5%. In 2020, we fell 7.5%, 9, 12, 13% a couple times during the year. 2022, we fell 4%, approaching in June. So, I mean, yeah, and the NASDAQ dropped by approximately 4% yesterday is what they're saying. So this 4% drop, while it's not good, it certainly doesn't mean, like, we have to crash now, right? Like, it's possible this is the start of something. But it's certainly never definitive in that way, you know? Like, you gotta understand that. Like, a 4% drop's not that uncommon. A 15, 20% drop, that's different. And so we just got to call it for what it is, I think. Yeah, the DeepSeek thing can be seen with a silver lining, I think. And I think the silver lining is going to be, we're going to get AI models efficient and cheap. And that's good. And I think, you know, that's a good thing, you know. Yeah, it's a good thing. Yeah, here's Top Step right here if you want to check it out. Again, remember, not an investment professional. They're an affiliate of mine. I'm biased. You want to confirm it all with them. Understand the implications of CFTC 4.41, hypothetical or simulated performance, have limitations. Look at all this stuff. Understand it. Remember, I am terrible and have no idea what I'm talking about. Maybe wildly wrong about anything I say here. It's for entertainment purposes only. In my experiences, wins or losses in trades may be conducted off stream. I might lose off stream and you might not see it. Do not copy me. I have no freaking idea what I'm talking about. They're an affiliate of mine. I am biased. They pay me money. Whew. All right, guys. With that said, here's the link if you want to check it out. Oh, is it blinking? It's just, I got to reset it. Yeah, all good. Here, it's all right. We'll just remove this one. DeepSeek is... Yeah, I mean, I'm sure they are. Is it a buy opportunity now, guys? Let me know. Let me know. Is it a buy op? You know, here's my issue with Tom Brady. Okay, here's my issue. Great football player, the greatest of all time. All right, dude looks like a freaking Barbie doll. Okay, like he looks like his face is shiny. I can't get around. Like it's too much. It's too much. Looks like a freaking Barbie doll, bro. You know. I just can't get up. I don't know. There's just something off about Tom Brady. Stop spamming it, Richie. Okay, bro. Sit in timeout and think about what you've done, Richie. There's no code, just affiliate link. Yeah, exactly. Thank you, Sam. Yeah, there's just something off about him. I don't know if it's, you know, I don't know if this is the crash yet. This might be the start of one. It's definitely doesn't look good. I mean, here's Nvidia, right? Like you could always look at it like a daily chart. Been in this long upward trend. Here's the pullback. You know, and again, guys, like I told you guys, I wasn't interested in buying stuff up. I told you guys, you know, nobody freaking believes me. You know, and again, I don't know if I'm right. I might be wildly wrong. I don't think it's something that people should believe me on. Be skeptical of everything I say until it's proven correct, because I really genuinely have no freaking idea. I just know we're up a lot the last 2 years, and like as we go higher and higher, it gets greedier and greedier to buy. Right? Like as we stair step higher and higher, it gets greedier to buy up here. And so I'm just not really interested in buying up there. And so I say, okay, like my limit is out there. Like I'm done buying up stuff right now. I need pullbacks. I need a correction of some sort before I start buying again. And that everybody should have a limit. Now, everybody's limit might be different. You know, some people are going to have a way different limit than I have, but that's my limit. I'm just not interested in buying up stuff right now. Yeah, definitely top 3 wrongest ever, I think. Yeah, for sure, Tom. It doesn't mean anything. I don't know if we crash or not. I really don't know. We could keep going up for sure. This might be the little correction we need, and everything could correct 4 or 5% and then continue on business as usual. It's definitely possible that happens. I'm not really here to say. I really don't know. Nobody freaking knows. Depends on what happens for the Fed meeting. Depends on what happens with GDP data. Depends on what happens with PCE inflation data on Friday. Depends on what happens with Microsoft and Apple and Tesla and Meta earnings over the next 4 days. The next 4 days is going to be wildly influential, and then Nvidia earnings mid-February are going to be even more influential. So that's what matters the most. Eagles or Chiefs, guys? All right. I have some small limit orders to buy the Nvidia div still. I believe it's for the long term. Boo the Chiefs. Boo. Yeah, I'm not saying we crash either. I'm asking people if we crash are correct in the title. Like, if you're looking at my title, there's a question mark here, guys. There's a freaking question mark. All right. 5 minutes away from my house. He's local. Yeah, I get it. Yeah, everybody wants the Chiefs. No, it's all good, Richie. Just don't spam. Like, if we have an automated thing where it'll post stuff, don't just, like, there was too many links that were posted. I had to just go back and delete them all. It's all good, but yeah, just don't do that. Yeah, looking at our poll, we asked people, do we rebound or does the market continue down? 58% said we rebound. 42% said we continue down. I don't see a reason why the whole market would crash. Yes to an Nvidia crash big time. Yeah, I think if Nvidia crashes, the whole market goes down with it, though, is the problem, right? Like, that's pretty probable, I think, if the whole market goes down. Yeah, durable goods aren't that important, though. Yeah, we got the Case-Shiller house price index, too. Look at the Dow. Where's the Dow out and all this stuff, man? I haven't really looked at it. We can look at the Dow futures contract. YM. Dow's ripping up. Dow's not really the most diversified company, or diversified ETF, I mean. It came all the way back yesterday, though, which is good, I guess. You know, the 30 companies in the Dow are less tech heavy, though. So, like, an example of this is, like, the Dow is 30 companies. Big ones include, like, Super Micro's in the Dow. And it's down, but the Dow is less diversified. Like an example of this is like the NASDAQ is much more tech heavy, Mag 7 heavy versus the Dow. The Dow is a little bit different. And so when you look at the NASDAQ here, it's down. It's still down significantly. You look at the Dow, again, less diversified. It's back up. So tech heavy here, not tech heavy, you know. That's what's going on. Like, it's just less tech driven. I don't know. We'll see. The big thing coming out is the FOMC meeting tomorrow. I think we might have had some earnings today too. Let's see what we got. Yeah, we had Boeing this morning. Boeing missed EPS, missed revenue. So let's take a look at some of this here. I didn't even notice. Boeing missed EPS, missed revenue. It's basically flat. Didn't really move much at all. Missed EPS, missed revenue. GM, General Motors. It's basically flat too. It beat EPS, beat revenue, had better than expected guidance. We got Royal Caribbean. gapping up to 250s basically. It beat EPS, missed revenue. So flat, neutral numbers. We had Lockheed Martin. Lockheed Martin beat EPS, missed revenue as well. We had RTX, which is chips. Beat EPS, beat revenue. A couple other companies, but that's basically all the big boys here. Kind of flat. A lot of them are either green or flat, so this might be helping stuff rebound too. Here's the NASDAQ. And we will try to trade. We had a pretty good green day yesterday. We are going to try to scale up our size somewhat here. Does LSU fire Brian Kelly? I'm reading something that said Brian Kelly had Jaden Daniels, Malik Neighbors, and Brian Thomas last year and still didn't play in the SEC championship. I agree, man. I think it's a little too early to fire him, though. But if he doesn't do good next year, we got to let him go. Find somebody else. Be like the Saints, bro. The Saints brought in a new head coach within a year. They were like, all right, time to find a new one. I think that's what we got to do. Who's picking these things, man? I know we're not like a huge market cap team in the Saints, but yeah. Bring back freaking Peyton. My voice is quiet. Is it really? I could try to turn it up. Hold on. I think there's a way to. Let me figure this out. Test, test. I'm turning the volume up a lot. Let me know if it increases it. Test, test. Is that better? Let me know if that's better. I'm trying over here. I can turn it up to 8 decibels too. It says it's at 8 now. That should be pretty good. Yeah. I don't know. That means we are doing bad if one company carries the whole sentiment. Yeah, but they've basically carried the market, Nvidia that is, for 2 years now. It's just because it's not just Nvidia, but it's advancements in AI that show an innate need for chips. And with that innate need for chips, Nvidia is the chip provider. And so that has driven the market the last few years, really. And maybe after this news on, maybe after this news around DeepSeek, it means that we're going to be relying less on chips. And in that regard, maybe some people will celebrate. I don't know. Yeah, I know the Saints are looking for another head coach. That's what I'm saying. SoFi had earnings yesterday. I'm not sure what they did. Tariffs. Yeah, I mean, we'll see. Yeah, SoFi didn't do great. I know they had earnings yesterday morning. They fell from the earnings report. They didn't do good. They fell from all of it, really, but especially from the earnings report. It's hard to tell whether it's directly influenced by their EPS failure or because of the big chip news, which they're a tech company. They're an online lender. GM CEO Barra anticipates over the next 5 years of approaching $2 billion from a revenue perspective with Super Cruise, according to CNBC. See if we got any other news. Nvidia, some others are moving in pre-market. Lockheed Martin, Q4 showed 222. Missed EPS revenue as well. All right, so Alphabet's Google is going to face off against the European Commission in an attempt to overturn a $4.12 billion antitrust fine, according to the Wall Street Journal. What benefits or motive do you think DeepSeek's reason for open sourcing their code is? I don't know, man. I think I don't know, to be honest. Maybe like as a credibility thing. I'm not sure. It's an interesting question because you'd think they would keep it secret. But if they kept it secret, I think one of the responses from most people would be, well, how do we know it's true? And so I think that's probably what it is. I think a lot of big tech companies are open sourcing. Yeah, Meta does as well. Yeah, so I think a lot of companies are. So I asked AI the same thing. They said by making it freely available, they aim to make advanced AI technology accessible to a broader audience, including researchers, developers, and organizations that may lack resources to develop such models independently. It encourages collaboration within the global AI community. So maybe they're trying to collab. It's challenging proprietary models, competitive alternative to proprietary AI models like OpenAI. Resource efficiency, develop it with limited resources. The R1 demonstrates that high performance AI models can be created without extensive computational power. And so yeah, just competition. VR trading. Yeah, I mean, I don't think it's quite there yet, but I think it's almost there in terms of VR usability with that type of stuff. I think it's almost there. Yeah, I think it's almost there. And again, we got durable good orders dropping in like 40 minutes. I'll put a timer up. It's not the biggest report, but we're going to cover it anyway. We got the Case-Shiller house price index going live too. We got 36.5 minutes basically right now. There we go. This was a reaccumulation, fresh positioning before the FOMC. Maybe, I don't know. FOMC pretty likely that we're gonna pause rates. I mean, these dips have probably, yeah. So we're back to 99 to 1 or less than that actually. If we look at the Fed likelihood, we're back to 99.1 likelihood. So yeah, we're bouncing right at the previous close. We'll get ready to trade today. But yeah. Bro, if the Fed cuts rates with only a 1% market expectation, I think the Fed will drop like... Yeah, I mean, listen. If the Fed cuts rates, the market will probably initially react negatively to it. Even though that's kind of the opposite to conventional thinking, right? Like, if the Fed cuts rates, that means lower interest rates. But the problem is that what that shows, right? By the Fed cutting rates, even though it's overwhelmingly not expected for them to, and it's expected for them to pause rates... That shows fear by the Fed, right? So if the Fed cuts rates, that means they're fearful. And that's going to make the market panic, and that's going to make the market drop. And, you know, short term, Although it's probably going to be better for people long term in general, you know. So yeah, we're gonna watch our levels. All right, so we got 500 people here. Y'all hit that like button, hit the subscribe button. I appreciate the love. Thanks so much. Revise up to 3 for 2025 announcement, but no rate cuts in January. Yeah, we're almost certainly not going to cut rates. We're going to pause rates. That's what's overwhelmingly expected. If the Fed cuts rates, it'll shock the system, really. What do you think about gold? I think gold fell. The data that comes out today is durable goods. Not really a huge report. Bitcoin back up, though. I didn't even realize this. Bitcoin is back up something nice. Now, we are green on the year. Yeah, so I'm reading a lot of this updates on the news. All right. Yeah, we're catching up on news. I'm sorry. Yeah, so Beacon Roofing adopts. So Beacon Roofing Supply said on Tuesday it has adopted a limited duration stockholder rights agreement, commonly known, following a hostile takeover bid. Beacon is issuing one preferred share purchase right for each outstanding share. Interesting. Hostile takeover. Hostile takeover is basically when, now there's a couple ways you could sell your company, or your company can get sold. If it's a public company, that is. One of the ways is that you draft an agreement, kind of like Twitter, right? When Twitter was sold to Elon, they agreed on a price, followed through on the price, and boom, it was sold, right? The other way is called a takeover, which basically means basically means the company doesn't agree on a sale. Like, they don't agree on a sale, but somebody with enough money comes in, and usually they consolidate investors to get it done. Somebody with enough money comes in and basically buys up the majority shares to gain control over the company. And it's called a hostile takeover because it's kind of hostile. Like, a lot of the times the company involved is public, and so they don't really have any control over who buys shares like that. And and it basically forces them to sell in some ways and change things. Kind of like Succession. Yeah. What about the Bank of Japan interest rate? So the Bank of Japan came out as expected. They raised rates to 50 basis points, 0.5%. Yeah, so again, guys, we'll see if We'll see if Bitcoin can hold, man. I'm hoping for it does. Well, the opening bell is going to be really, really interesting today. Really, really interesting. We got 30 minutes before the durable goods comes out. What about a proxy war? Is it the same as a proxy war? No, a proxy war is when... A proxy war is when two opposing sides, they're not technically at war, again, on a technical basis with each other. They're just each supporting the opposing side, right? And so it's like if two countries that are kind of like world powers that, like, you know, if they each pick a side in a war that they're not fighting in, but they pick a side and support. It's kind of like, you see it a lot right now in modern times with, I'm not going to be too specific, but like overseas, you see it with like Russia and China, where we're supporting sides that they're against and they're supporting sides that we're against, right? Where we're technically not at war with each other, but it's a proxy war, which means like we're supporting sides against the other one, if that makes sense. No, they're not going to base... what would cause a rate cut, Lewis, there's a couple things. Number one is if the market had some massive correction. I'm not talking about 5% like yesterday. I'm talking about like 20%. Market looks like it's going to crash. That might urge the Fed to cut a little bit sooner than originally anticipated. That's number one. Number two is if we see deep economic weakness through the economic data, right? Which we don't really have any coming out between now and the rate decision on Wednesday, tomorrow. But one of the things would be like weak economics, like weak economic data. You know, an example of this is like GDP showing up at like 1% versus 2.5% or something like that, right? Like that might trigger the Fed to cut rates earlier than anticipated. But again, we don't really have any data coming out between now and then except for durable goods, Case-Shiller house price index, the other stuff today that's not influential. Yeah, so that's the only reason the Fed would cut rates earlier than expected. And unfortunately, or fortunately, depending on which one you want, we don't really have any of that data coming out between now and then. Consumer data. Yeah, we have, let me see what else we got. We got some type of consumer index data coming out. We have, consumer confidence, CB consumer confidence at 10. Not the biggest report. We'll cover it, but not the biggest report. Dude, how are Vipers so expensive, bro? This one's kind of cool, though. Energy. This song is kind of funny. I always had a poster of a Viper on my wall. The problem is, like, okay, if you want a 2013 Dodge Viper, it's going to cost well over 100 grand, right? Which, like, if I'm going to spend over 100 grand, I'm just going to buy, like, an actual supercar, you know, of some sort. Just because these are two, you know, yeah. And then the other ones, they're old. Some of them have less miles on it, but I just don't know if it's worth it, to be honest. Plus, they're all rear-wheel drive, which is like, you know, you ever seen those videos of Mustangs trying to look cool? And like they're revving it up and they're going fast, and then they just end up running into something looking dumb, right? That's mostly because it's like a rear-wheel drive car, and whoever's driving it just doesn't really understand it. And so they floor it around a turn, which you should never do in a rear-wheel drive car. And that thing just skirts off and runs into something because people are dumb. Yeah, no, they're cool. The early Vibers are cool. Again, I talk myself out of it because it's financially irresponsible for me. You have any trade ideas for the day? Honestly, I'm waiting for the opening bell volatility to come out. Like, we're still down a lot in the last 48 hours, but we've rebounded a little bit. So you got two basic trains of thought that I think you can use here. All right, so again, we have dropped a lot and then rebounded back up some yesterday for most things. Right now, the question is, let me put a different chart up. The question now, here's the NASDAQ. Yeah, so you can kind of see the NASDAQ has dropped significantly and then rebound back up, sitting here right now. The question is, now what do we do? I think you could argue either way. You could say, hey, we're still down. We could continue back up and rebound and go back to where we were prior to that. That's possible. Or we could continue back down and test lows today and get weak, right? Either one of these things could happen. We're ahead of big economic reports, big Fed decision. We're ahead of earnings. So we're ahead of a lot of market influencers. But the problem is that I don't think either of those things is necessarily predictable, right? Like, you're going to have some people that are like, yeah, we're going to crash. And you're going to have other people that are going to be like, oh, no, it's a buy opportunity. We're going to bounce back. And I understand both theses, to be honest. I understand both of them. And I have no freaking idea which one we do, right? I think either of these things is possible. And I don't think anybody really knows. I think a lot of people want us to bounce back because they're buying up stuff right now, and that's fine. I'm not against you, and I think a lot of people want us to continue dropping because they want us to crash. And again, I'm not necessarily against you either there. I know for me, I'm not really interested in buying up anything, and I'm going to wait until the opening bell until we do anything there, just because there's not enough edge in either side for me. I am done explaining why the market has to go down. Yeah, but Yair, to be fair, brother, you said the market would be dropping. Like, let's just be honest here. You said the market would be dropping here. And so unless we drop under like 450s, 425s, you know, I'm not saying you're wrong, but, you know, I'm gonna wait, if that makes sense. You know. And it's all good. Like, listen, I've been wrong about a lot of stuff. But yeah. You've been saying we're bearish for the last, like, year plus. And the market in that period of time has ripped up fast. And at this point, I think the market's extended. Like, I sold a lot of my positions. I'm just sitting on my hands waiting. And if we get a big bull run, so be it. But I'm going to sit on my hands and wait. What's your thoughts on AMD for the day? I don't know, man. I think chips are vulnerable, but I'm waiting. AMD's a little bit weaker than a lot of the other chip companies, too. All the way down to 114s. And I think me selling AMD... Again, I sold my AMD position. I sold a lot of stuff yesterday, and I'm green on the year in 2025, so that's good. I'm happy to be at that spot, and now I'm just going to wait for pullback opportunities to buy, but it might take me a little bit. Yeah, I'm not trying to get Yair. I just got to be honest, I guess, with him. He has been very bearish for a year plus now. And during that period of time, like, the market's up like 30% since he's been bearish, right? And that's okay. I get it. Like, I get it. Honestly, being bearish where Yair was bearish is not a crazy thing. Market at that point was up like 40-50% already. And so being bearish there is not like bad, I don't think, as long as you're not shorting. If you're shorting, then you get yourself in trouble. But yeah, the market has just kind of ripped up another 50% in a lot of areas. And so unless the market's going to have some big drop where it's over 40%, you know, yeah, I'm just gonna wait. Yeah, I agree. I mean, again, we're at this point where I'm not interested in buying up anything either. The only thing I want to buy is like hedges against things. Like I don't mind buying like some gold maybe. Even though gold, on the other hand, like I've been telling people this for months and months now. What I have against gold, you know, you hear people and they just regurgitate buy gold, buy gold, buy gold. And I like gold long term. But gold short term can be, or gold medium term is what I'll call it. I mean, over like a 5 to 10 year period, gold can downtrend for a decade. You know, so like buying gold's not always good. And the time to buy gold generally, if you look at charts, is when it's downtrending, not when it's upward trending. You know, you buy it when it's upward trending, you might get stuck in a downtrend for a decade. You know, that's it. So if I'm going to be buying up gold, it's going to be in bearish markets for gold, not when it's ripping up, breaking lifetime highs. I don't think that's very smart. It depends on how long you're willing to hold it. But the issue is that you got all these companies that push gold super, super heavily. Like they're selling gold value boxes and they're profiting from this as well. And they're selling gold as investment subscriptions and like all this different stuff. But the one thing that they're choosing not to tell people is that gold can and will downtrend for 5 to 10 years. And so if you get stuck in a bad market for gold, you know, you just got to wait. And so gold is good unless you're about to retire anytime soon. That's probably not the best time to buy gold. You know, there's times to buy it and there's times not to buy it. Yeah, Yair's cool. I like Yair. We could agree to disagree as long as you're not toxic about it. It's all good. All right, chat. We got 20 minutes left until durable goods. Yeah, so the other thing, like the way I'll put it is like this. All right. People act like just because something's up, it must come back down. Okay. That is absolutely not true in stocks. In stocks, absolutely not true. At least in like indices. In indices, that is absolutely not true. In fact, it's kind of the opposite. It's more so if something goes down in indices, it has to come back up. Now, a light bulb should go off in a lot of y'all's heads that aren't investing yet that says, hey, well, I could just buy pullbacks in indices and sit on it long term and eventually it's going to come back. And that's honestly almost certainly true. If you wait long enough, that is. Like, it might take a decade, but this is almost certainly true. But it's the opposite on the upside. Like, something goes up, it doesn't necessarily have to come back down. It might drop a little bit before it continues back up. And you just don't want to get stuck shorting like stuff like this, you know, where you're just going to eat losses long term. But stuff's going to go up long term is what I mean. I reckon we'll see a volatile couple days. Feds won't change rates and outlook will be dovish with caution. We'll pick up next week and rally. I don't know. So what makes you think the Fed's going to be dovish? Dovish meaning pushing for low interest rates. I think we could see either Fed. I think it depends. But I think we could see either one. I think we are seeing declines in the market leading up to the Fed meeting. So I do think it's plausible that the Fed's dovish, right? Like they're going to look at the weak action that we've seen over markets and say, hey, we might want to, you know, calm some of these fears and be dovish and see if that will help markets. But it doesn't necessarily mean they will be. You know, them pausing is a hawkish stance in the first place, you know, and I think that I agree with that logic, but I don't think it's 100%. I think it is possible they're also hawkish. You know, I think they might fear inflation spiking, and you got to understand in the Fed's mind, they're going to fear inflation, even if we don't see it yet, right? Like the Fed understands that inflation makes them look bad. And so they're going to fear inflation and they're going to do what they got to do, hopefully, to prepare the market and the economy and the Federal Reserve from inflation spikes, to avoid that type of thing. And one of the ways they avoid it is by being more hawkish. And so it's possible that they're dovish, trying to calm some of these fears from the latest drops, but it's definitely not 100%. We'll see. On jobless claims, you just got to look at the unemployment rate. Jobless claims, weekly unemployment filings. We went up last time, but that's just a week-to-week report. Now, you can use that to gauge what unemployment is going to ultimately be, but it's just a week-to-week report. We got to wait for that, I think. Yeah, exactly, Ty. Ty makes a good point. Average bear market is 9 months over the last century, and average bull market is like 3.5 years. Right, exactly. But the question you got to ask yourself is, when did the last bull market start? And, you know, we're getting close to the average end for a bull market, I think, as well. I think you got to look at it in terms of how much we're up and all that stuff. It doesn't mean anything. You never freaking know. All we're doing is theorizing when it's going to end. It doesn't mean anything. We could bear market, we could bull market, nobody freaking knows, you know. But people have to understand, like, bear markets are pretty rare. There's only been, I think it's like 3 times in the last 100 years where we have had a bear market that lasted longer than a year, I think is the statistic. I'm not 100% sure if that's correct. Back check me if you want, but it's something like that. And so that kind of shows, what it shows for me is, like, when we start to bear trend, it might be time to start accumulation. It might give you a little bit of an idea of when you should start accumulating things in stocks and indices. But again, you never freaking know. I agree. If the Fed is hawkish with their outlook, it will scare the market further. The hawkish stance is delivered with no rate change. Yeah, I mean, I think it's harder to predict. I would say it's easier to predict that the Fed's going to say they're going to be neutral in terms of tone. What I mean by that is, like, they're not going to be overly hawkish or dovish. They're going to say, we're going to wait for the data. We're going to take a data-dependent approach. You know, we're committed to our 2% inflation goal over time. Like, whatever they normally say is what they're going to, you know, say. What do you think of DeepSeek? I think it's an interesting thing. You know, all we can do is theorize what it means at this point in time, right? And what we could originally theorize from all of this, which is what's causing all these drops, right? The reason the market drops significantly over the last 24, 48 hours is because DeepSeek has an open source AI system that uses, what is it, like 80, 90% less chips. It's less chip intensive. You need less powerful chips to make it run. And it basically maintains the accuracy of the previous AI systems that we've built without the need for super expensive and powerful chips, right? And what this is causing in markets is fear regarding microchip companies, because if we're going to create systems that don't need their chips as much, and at least in the same way, you know, maybe that puts less of a need for some of these big AI companies. And that is why a lot of these big AI companies are falling. That is the catalyst that made everything drop significantly overnight yesterday. And yeah, we'll see. That's not hawkish. Market priced in no cut since a month ago. Hawkish, Jed, means a Federal Reserve that does not want lower interest rates. Okay, so a pause or a rate hike in general is a hawkish thing. It means, hey, the Fed does not want to cut rates, which is hawkish, right? A rate cut, it's not bearish bullish, right? Like hawkish, dovish does not mean bearish, bullish. Hawkish means a more restrictive monetary policy, i.e. less rate cuts. Dovish means a less restrictive policy, lower interest rates. Hawkish means a more restrictive policy, higher interest rates, or pause, I would say. But yeah. Hey, thank you, Niels. Any thoughts on Bitcoin this year? I think Bitcoin's interesting. I think if Bitcoin can hold over 100K, 95K, it could pick up another, run sometime, depending on what happens with banks and everything else. Bitcoin can run on a lot of different catalysts, and so, yeah, we're watching it for sure. I appreciate the donation. Thanks so much. Yes, there's the durable good orders report that drops in 9 minutes. Love you. Have a good day. All right, guys. Yeah, and with Nvidia coming out with like their Blackwell chip model and all the other stuff, it's a big report that we got to watch for, I think, tomorrow. Bro, I was watching Bloomberg and the host said irregardless. I left and came here, as you should have, sir. Irregardless is not a word. They might have added it to the dictionary to pander to people. It's not a word. Okay? Like, it's just regardless. I wanted to go to the store regardless of the snow. Irregardless is not a word, regardless of whether it's in the dictionary or not. Okay? It's not a word. Stop it. My issue with it is this. All right, I'm not trying to judge. My issue with it is this, is that people say irregardless to try to sound smart, but they end up sounding dumb because it's not a word. And anybody that is smart is going to recognize that it's not a freaking word. It's a pet peeve. I'm sorry. You knew it. Yeah, Boeing had earnings. I think they missed EPS and revenue. I'm surprised Boeing's not down more. Let me see. I think Boeing missed EPS and revenue. I'm not 100% sure. Yeah, Boeing, revenue 15.2 billion. What did they expect? Yeah, Boeing posted 590 EPS. They missed their 322 loss expected, so a bigger loss than expected for Boeing. 15.24 billion in revenue, so lower than expected revenue and earnings per share. Bigger loss than expected EPS. I'm surprised Boeing's not crashing down here on this earnings release. Here's Boeing. They're kind of flat. Maybe they dropped enough yesterday, but yeah, Boeing missed big on EPS and revenue. Well, I guess it's a word. Just like, You alright? Yeah. Alright, bro, come on. Here, don't be all gloomy, dude. Here, it's alright. Come here. Love you, dude. Have a good day, buddy. You okay? Alright, I love you, bud. Dude, my son is not a morning person at all. Alright, guys. Hey, we got 6 minutes left until durable good orders come out. A little bit earlier than that. They try to sound sophisticated with irregardless. Yeah, that's my issue with it. It's like a pompous. They're like, irregardless of. It's like, that's not a word. Yeah. Yeah, ain't. Right, I'm sure ain't in the dictionary. But does that mean it's really a word? No, it's not. It's slang. Yeah, we're here. We're trying. Make 2025 the year of risk management. Yeah, let's try. I'm trying to, man. I'm trying. Yeah, I mean, he said he wants to lower rates, but there's not a way to do that. Like, I want $1 billion. That doesn't mean I can have it. It's something I tell my kids all the time. And so while he demands lower interest rates, like, look, to be honest, it's not like, okay, if there were no problems that arose from lowering interest rates, we would always have low interest rates, right? The issue is that if we are too dovish, inflation spikes. And so I want lower interest rate as well. Number one, mortgage rates are kind of a different animal altogether. They're not that easy to control. But if we're talking about just general interest rates, there's consequences for having too dovish, too loose of policy. Y'all is a contraction for you all. I mean, you could say it's a word or not, but my issue is people don't use y'all to try to sound smart. People use irregardless to try to sound smart, but the irony is just too strong because it's not an actual word. Yeah, I mean, I don't know about DeepSeek. I think DeepSeek's interesting. I think there's some big implications towards the AI world in terms of chip needed and usage. And it's open source, which is even more interesting too. But again, as of now, I'm not sure what the net effect is going to be from all of it. All right, guys, we got 3 minutes until durable goods. Oh, I'm definitely the top 3 most pretentious guy ever, you know. Like, listen, if we had a humility contest, I'm not saying I would be the greatest ever, but I definitely be in the top 3 of the most humble people on YouTube in the world right now. People tell me all the time, they're like, John, you're so handsome. You're the greatest trader I've ever seen. And I just try to take that and be like, you know what? It's true, but let me just act like it's not true so that people like me more, 100%. And yeah, thanks so much. I appreciate it. I'm like a prodigy savant trader here. All right, guys. Hey, we got 2 minutes, though. We got 2 minutes. Yeah, top 3 most humble ever in the world, for sure. All right, guys, we got 2 minutes. You think we're going to get higher or lower durable goods? So durable goods orders are expected to show up at... Let me see. Hold on. Yeah, so durable good orders. We got about a minute left, guys. About 1 minute. A little bit earlier. They're expected at 0.1% for month-over-month durable goods. 0.1%. See, that's weird. I'm showing on the other source that I have 0.5% for durable goods for December. So why the varied number here? I'm showing 0.1% on one and 0.5% on the other. The core durable goods are expected at 0.3%. Weird. Yeah. Strange. All right, but hey, here we go, guys. Let's see what we get. I'm ready. We got 40 seconds. And then tomorrow we got the mortgage rate data coming out today. So if we're talking about interest rates. All right, you guys ready? I don't think these are really going to influence markets, but let's take a look. We'll put the Q up. Watch it. Put a 1 minute chart up here. Watch it. Put a gold up. We'll watch this. What's the joke? Every time you say top 3, what joke? There's no joke. It's just absolutely true. All right, so here goes durable goods. All right, so there goes durable goods. They came in noticeably lower than expected at a negative 2.2 for durable goods. Lower than expected, negative 2.2 versus 0.3 expected month over month. Negative 2.2 versus 0.3. I'm wondering if this is going to make the market go up or down. I would assume it's going to make the market drop for durable good orders. Again, minus 2.2 versus 0.3% expected. So much more negative in durable good orders than expected. And durable good is the change in total value of new orders for long-lasting manufacturing goods. So this is basically strength or weakness in manufacturing. And look at the candle. So we are dropping a little bit on this report. Not the biggest reaction, though. But again, minus 2.2 versus 0.3% expected. Yeah, so here's the data release right here. I'll put it up on the bottom of the screen. Yeah, so big yellow letters. Durable goods. There they go. Yeah, it is definitely worse than expected. I believe you are the number 3. Number 2.5. Is that good for inflation? Yeah, it might be. Less orders. And look at the market. It's reacted negatively to this. Look at this. So, look at that drop. Interesting. Already came out on FX calendar. So, healthy living, you're probably delayed on the stream. So we have already covered it. It's actually in big yellow. So you're probably delayed on the stream. Hit the live button next to the play button, healthy living, and you'll catch up to the stream. It sounds like you somewhere lost the live aspect of the stream. So you hit the live button, sir. Nvidia going pumpy or dumpy. The last 2 days it's gone dumpy. I don't know whether the market's going to go up or down now. Yeah, Nvidia dipped a lot this morning too. Yeah, some of you guys are delayed on the stream. All you guys yelling at me to miss the durable goods order. Hit the live button next to play button to catch up. Some of you are delayed. People can't afford the same lifestyle. Businesses are being shut down. Banks are starting to fail. What banks? Yeah, Nvidia fell heavy yesterday. It's still up. Technically, Nvidia is green on the day, though. You know, you can see the previous closing line right here. And so technically, Nvidia is still green, but it's not like it's still got a ways. Dead cat bounce, maybe. Possible. We'll see. I'm on Nvidia options. I'll buy more dips, or you're on call options. Good luck. We might rebound back up. It really depends. There's a lot of volatility coming out the next couple days, and so if you got in a couple days ago, you might still have time. Like the IV is not going to be as high as it will be like today or tomorrow ahead of the Fed meeting. Do we catch the falling knife? I'm not sure. I'm waiting. We got too much economic reports dropping in the next 3 days for me to really want to take big positions, to be honest here. All right, guys. And if you haven't already, we are going to be day trading live at the opening bell. We are going to be day trading on TopStep's funded account program. TopStep gives you a demo, and they test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. The base one on TopStep is $50. You're basically risking $50 a month. They give you a 50K demo. It comes with real-time data, and the value's there. Because if you were going to pay for a demo account and futures with real-time data, it's going to cost about the same, right? But they're going to give you that 50K demo. If you can make 3K in profit on it without losing 2K while following their rules and conditions, they fund you 50K, 90% split, and they've paid out almost $200 million. You also get to keep your first 10%, or your first 10K, in profit. And so the value is there. Understand they are an affiliate of mine. I am biased because I get paid by them, not an investment professional. I'm not liable if you lose. You always got to make your own assessment, trade responsibly. You want to confirm all this with them. I can't guarantee anything. I'm the top 3 most biased promoter of all time ever in the world. Do not copy me. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. But yeah, they're going to give you a demo, test your skill with it. If you pass the test, they fund you. If you fail, you only lose $50 a month for the base one. It's not the end of the world. It's limited risk. teaches you how to trade. If you're good enough to pass it and good enough to take withdrawals, you could then fund your own account. The most legit one in the world. They've been around for over 12 years. And the other huge edge of Top Step is that there's zero commission. And so I can do all this stuff with zero commission and make, you know, $10, $20, $30 and net almost all of the profit from it because there's zero commission. Great way to learn how to day trade. Most day traders lose. And to be honest, if you risk thousands of dollars funding your own account instead, you're probably going to lose it. 90% of day traders lose, so it makes no sense to fund your own account trying to look cool. Instead, try this. If you show good success with this, you can then try other stuff. You could fund your own account, but if you fail, you're going to lose much less than thousands of dollars that you might lose funding your own account. It just makes sense, right? But again, they're an affiliate of mine. I'm biased. Some would say I'm the top 3 most biased trader ever. But in the futures market, again, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. And so it just makes sense, I think. Patterns are very similar, the blue chip stock patterns. You can even trade micro Bitcoin. But if you want to check it out, link is in the chat right there. I appreciate the love. Thanks so much. I'm a killjoy because most fail. Yeah, well, you can't really win on YouTube. Yeah, if you talk about you're the greatest person ever, top 3, people are like, man, this dude, he's pretentious. And then if you tell people you're biased and most day traders lose and you're the top 3 worst trader of all time, then they say, man, this dude's a buzzkill, a joy kill, man. You can't win. Is it better to do algo trading? I mean, better is subjective. Some people it is, some people it isn't. It just depends on who you are, what you do. These are my support and resistance levels. We're still in that range, which is good. I can kind of use them to guide me in the trades. Was the data humble? The data was much weaker for manufacturing than expected, causing this big turnaround. That's what it was. Data was much weaker for manufacturing. I'm trolling. I like your comment. I'm being sarcastic. You're the greatest ever. You know? VeChain. I like VeChain. Don't buy it. I'm not telling you to buy it. If you copy me, you probably lose. But that is humble for inflation. What's with this word humble? Is Nvidia inspiring today? You know? I can't tell. Is Boeing apprehensive? Is the NASDAQ comedic today, guys? Where's Nvidia? It's down to 119. All right, so we're bouncing right here at 300. Let's see what the micro NASDAQ does. I'm not supposed to trade in pre-market, though, guys. I'm trying my best not to. Up 3.43%. Nvidia's in semi should rally. Yeah, I don't think anybody knows. It's not definitive. Like, we could all speculate on what the market does from the FOMC meeting. It really depends on what Big Papa Jerome Powell says during the press conference. That's what matters the most. That's what I'm watching for, is what he says during, not the press conference. So the report, just to clarify, every time the FOMC decision's released, they have like a 1-page report kind of detailing why they did what they did and all that good stuff. And then Jerome Powell will essentially repeat that during the press conference and then do a Q&A, which is going to be like an important aspect of everything, is what Powell says, what's his tone like during the Q&A. That's the big event on tomorrow, Wednesday. Nvidia is overhyped and the hype is losing steam. Maybe. I don't know, man. People act like Nvidia is just so extended on the upside. The PE ratio, meaning the price to earnings, is only about 40 something for Nvidia. So while that shows some extension, it's not showing like the drastic amount of extension that a lot of people claim Nvidia has. You know? Like, if Nvidia had a PE ratio of 200, that's different. But it's not 200. It's like 40 something. It's like 45. And so while that still shows some extension, I think, the extension could be looked at in terms of future progress and optimism. But my point is, it's not like, in terms of its price to earnings ratio, Nvidia is not like wildly extended on the upside. It could be worse, is I guess what I'm saying. 40 is ridiculously overextended. Not in this current market. Like 30 is like good, right now. You know how many Mag 7 stocks are well over 40 PE? I would say majority of them most likely. Meta's got a pretty good PE ratio. Meta's like 30. Yeah, let's see. What's Nvidia's forward? Let me ask AI. See how accurate AI is. 30 is not bad either. 30 is good. That's what I'm saying. Like, here's the thing, right? Like, if I look at the EPS graph for Nvidia, I've talked about this before. Like, people look at Nvidia here. People look at Nvidia and they put a long-term chart up and they say, "Oh man, look how extended it is." But like, if you look at how much Nvidia earns now versus back then, it's wildly changed. Like, people act like Nvidia's up and there's no justification for it. Like, it hasn't earned, like its earnings power hasn't increased at all in the last like 5 years. And that's just not true, right? Like, Nvidia's earnings are up a huge amount. Like, look at the difference. This was how much they earned prior to the AI revolution. This is where they're at now. Just a wild change. And this actually kind of correlates with how much their prices increase as well, of course. And so again, people acting like they're just up big and there's no reason for it. I get it. You might want the market to drop, but I don't know if that's a good argument. And if we look at their revenue, I think it's even more profound in terms of the difference here. Yeah, so here's their revenue graph. So here's their difference in revenue. So again, their revenue has increased dramatically too, which is kind of like EPS is the margins, like how much they're netting. Revenue is the ceiling for how much they can potentially make, is what it is. That's because of the drop, it's 30s? Yeah, for sure. Where do you see the PE ratio is 58? I just calculated the PE ratio myself, David. Like, you can, like, they're going to say a bunch of different things in terms of, like, websites. The way you calculate PE is you add up the last 4 quarters EPS, and then you divide that by the share price. When you do that, it shows Nvidia's PE ratio is 46. 46. Yeah. Forward PE is 31, which is pretty good, right? And that's what I'm saying. Like, Nvidia's earning way more than they did back then. And so, again, people acting like Nvidia's just up and there's no reason for it. Like, nah, man, Nvidia's earning like 5-6x with what they were 3 years ago. Ugh. Why are y'all asking me what crypto PE ratios are? Like, we don't know what they're earning. I don't know what those crypto like coins are earning. This is price to earnings. When crypto starts to quarterly report, maybe then we can calculate their PE ratio. But until then, yeah. AMD's got a super extended PE ratio. Although AMD's PE ratio isn't as bad as it once was. Let me see what it is now. I'll have to look it up. Yeah, I'm showing 33 for their forward PE for Nvidia. Yeah, AMD's forward PE is actually 24.75. Their trailing 12-month PE is 100 though, which is not good. But We'll see what their forward PE looks like. Forward PE is basically looking at their projections for EPS and then using that to calculate it. Nvidia's at 122. Yeah, Nvidia's down significantly for sure. It's right at that 200 exponential. The reason I watch the 200 EMA is this. Like, look how it seems to be on a. Let me see. Hold on. Yeah, see, the reason I look at a 1 minute chart is because the 200 exponential will change. But for whatever reason, the 1 minute chart, like shorter term day traders, look at how well they watch this level here. Like 200 exponential, it literally bounces directly off of it. So if you're not watching the 200 EMA, watch it on a 1 minute chart. It can change your trading game for sure. Yeah, so we're just sitting tight waiting. We got 30 minutes left. We had green on almost everything yesterday. Bro, I can't deal with it, dude. Celebrities are crazy people. I just can't. Don't let all that green fool you. Nvidia is over, bro. Any trade ideas for gold short term? No, not really. I don't know what gold's gonna do, bro. Not ahead of this big economic reports. 3 days from you know, these next 3 days. I don't know why it took me so long to say that. No, GPT's great. GPT-4 is great. They've got tasks now. In the end, guys, listen, this will probably mean we have more efficient AI systems. It's going to be the net effect of all the DeepSeek news that we got yesterday. The end result is going to be more efficient AI systems for everybody, not just them, you know. And so there is a certain degree of optimism I have from all this stuff, you know. Yeah, so We're still watching some of these levels here. Again, I love it whenever we're still in the same range of yesterday because I can kind of recycle the levels I've used. Nvidia is still reacting with that 200 exponential moving average. All right, so the big three stocks I'm going to have on my charts: Apple, Tesla, Amazon, Meta, and Nvidia. What about Netflix? Where's Netflix at? Looks like me selling Netflix the other day. Was probably the good move. I sold my Netflix position at about 1,000. And so it looks, so far it was a good move. Long term, it's probably still going to break this. And I think Netflix is going to split sometime this year. We asked people over the next 4 days, does the market rebound or continue down? 62% of people think we're going to rebound. 40% of people, 38% think we're going to continue down. Still pretty split, though. I mean, it's not like 90-10 or anything. It's pretty split. 40 minutes left, guys. 40 minutes. Yeah, somebody took a huge short position. I'm looking at pawn on the NASDAQ. Our Discord has kind of woken up a lot, dude. Our Discord is getting some volume, man. Shout out to everybody on our Discord. Again, if you haven't joined our Discord, completely free, doesn't cost anything. Hang out with us after the stream. I'll post the link here if you want to check out our Discord. Here's the link right here. Let me post it myself just to see. There's the Discord link right there. Check it out. We're growing a little bit, man. We're growing. No, not really, Kane. Personally, no. My hashtag? Oh, you mean my tag? Yeah, I mean, we're getting big volatility in markets. The VIX, though, taking a look at the VIX. I think I'll put that up on the screen. The VIX is still extended on the upside, but dipped a little bit over the last few days. Basically, what I'm asking is, do we crash? I'm not saying we are crashing. It's a question. Because this is a big volatility week. Did you get your blue belt yet? No, I'm supposed to take the test this week. And so I've been honestly drilling. The blue belt test involves all basic positions like guard, half guard, side control, mount, back mount, north, south, like all the basic positions. Transitioning between all of those, right? Like I like to do knee slides a lot, knee cuts, knee slides, cross face passing. But then it's like all the basic submissions. I would say up to like bow and arrow chokes is probably the more complex submission that we learned. So it's basically like armbar, rear naked choke, guillotine, collar chokes, bow and arrow chokes. What else? Is there any I'm forgetting? Basic submissions. Kimura Americanas. Collar chokes from the mount, collar chokes from the back, bow and arrow. I think that's basically it. I might be forgetting a couple, but that's basically it. And then it's also like transitioning, knee on belly. That's basically it, right? Like the defense and application of all those submissions. And I have to be able to articulate it as well. Yeah. Different hit, like there's like 4 or 5 sweeps. There's like the hip bump sweep. There's the hip bump, the Kimura sweep, which are basically the same thing, just different kind of. One's a failed Kimura, but and then there's the scissor sweep, and then there's one more, and then there's passes, different types of passes. So there's like the Toriando. There's a bunch of different ones, and so I basically have to like articulate and demonstrate all of that stuff. Pretty easy. I mean, I already know all of it, to be honest. Articulating is the hard problem, the hardest part, but I think I think I do okay at articulating things and explaining things, but we'll see how it goes. A little nervous about it, but we'll see. All right, guys, so we're still breaking down. We're in this range. We are still respecting this $300 level in the NASDAQ. Well, to be honest, people in jiu-jitsu pronounce it the guillotine, right? Like, I always pronounce it guillotine, but people in jiu-jitsu, they call it the gilly, and they pronounce it guillotine for some reason. I'm not sure. You explain charts and data well. Hey, thank you, man. I appreciate it. Scissor sweep it's hard to explain. You get knee shield. You grab their collar, and you put your feet kind of like this, and then you kick it out, and then like sweep them. It's hard to explain. Look it up. Google it if you want. So we're starting to bounce back. We're still pretty sideways over the last 10 minutes or so. Very sideways range. You know, the question is, do we get choppiness today leading into the FOMC meeting and all the big earnings reports, or do we have volatility playing off of yesterday's volatility? What do you guys think? All right, guys. Yeah, I gotta delete it. Sorry, bro. All right, so we're still sideways here, chat. Still sideways. You guys ready? We got 30 minutes left, 30 minutes. We got the Case-Shiller house price index that does drop like right at 9 a.m. This is an interesting look at house prices. Case-Shiller house price index, it's expected at 4.2%. Last time it was 4.2%. So year over year, that is. So house prices have gone up about 4.2% year over year. That's what they're expecting today is 4.2% for the Case-Shiller house price index. That drops in about a minute and a half, 1.5 minutes. Fear? Let's not be too political, guys. I'm not against you, but let's not be too political. Let's keep like political stuff out of it. It just clouds everything. All right, guys, here goes the Case-Shiller house price index. Let's see what it shows. Again, 4.2% is what's expected in terms of year-over-year growth for house prices. It releases right now. 4.3%. So house prices actually went up a little bit more than expected at 4.3% versus 4.2% expected for the Case-Shiller house price index. Again, 4.2% versus 4.3% expected. Or that's backwards. 4.3% versus 4.2% expected here for the Case-Shiller house price index. House prices went up a little bit more than expected here. Yeah, dude, I basically have to dispute my property taxes for my rental property, bro. Honestly, they're freaking greedy, dude. Like, I bought this rental property. I got a discount on it. Like, I paid cash. I got a discount on it, right? In terms of property taxes, they're valuing, like, the what's it called? The government. The assessed value. The assessed value they're valuing at, like, freaking, like, 70 grand more than I paid for this property. Right? And typically the assessed value, which is like the government's assessment of the taxable value of the property, typically it's a little bit lower than the actual value, right? So they put it like 70 grand higher. That's way more taxes. And so I got to dispute it. It's a freaking mess, man. Basically, they're trying to tax me too much. Yeah, they're freaking, it's crazy. It's nonsense, right? Yeah, somebody accumulated 375 NASDAQ contracts. Crazy. Yeah, we're just not trying to be political. I'm not against you or for you. I'm just kind of neutral politically. So we got to just remove any. Yeah. Yeah, I'm in Texas. Well, you got to file something. There's like a filing that you have to do. The problem is that like property taxes are due in 2 days. But I'm waiting to pay them because if I pay them, then they're going to lock me in at that rate, I think. Right? Is that true? If I pay it, they're going to lock me in? I'm still not happy about it. All right, guys, market's still choppy, bouncing up a little bit too. Yeah, my mother-in-law actually dealt with this as well, but honestly, hers versus mine's even worse than hers, right? Like, what I think the discrepancy lies is that whenever you list a property, you never see what it actually sold for. And so the people who listed my home, or not my home, but the rental property that I bought, they had originally listed it for much higher. And like the strategy I used when I was buying this property is I put offers in like 5 or 6 different properties. And I just kind of lowballed offers. I just kind of threw them out there, see if they would bite. And like I put offers on a bunch of different properties. Eventually one of them did bite. And one of them was like, okay, fine. You know, they really needed to sell. And so I got it for a discount. But even still, like the actual value of this property shouldn't be where they assess the value at. I don't think there were any homes that sold at this price in the last like year. And so it's kind of out there that they tried to like slap a crazy, ridiculous number on here. You know, it's just ridiculous. Yeah, it's not a homestead. I can't do homestead. Yeah, I might have. Yeah, it's all good. I'll pay it. I still have time to pay it. I'm just not really happy about it. Yeah, for sure. People telling me it was a bad investment. Like, again, I got it well under list price. But the way where they assess my value, like I got it for like 20% under list, to be honest. So even if the real estate market corrects, I'm still probably going to be good. And it's a long-term anything. Like real estate has a good, like people yelling about rental properties. Like there's a reason long-term they can pay out. Like again, let's say the property's $300K. And I do this all the time, but let's say you get $2,500 a month on this property. right? Let's say you keep about half of that net, right? So you're netting 1250 yearly. You're netting about 15K, right? That's 15K in income that you're getting from this property. And so that's going to rise. Now, typically where I bought this property, house prices are going to go up, almost certainly where I bought it, right? There's certain places in the country where house prices are almost always going to go up. And that's where I bought this one, is in a place where prices are going to rise over time. And so even if they rise average of 3% a year, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, I'm going to make a bunch. And then when you add this to what I'm also going to earn in rental income, it's a good, genuine investment. It's a diversification investment, right? But in that regard, long-term rentals can be useful. Some people don't like them. I get it. But I think rentals are fine. You just got to figure out the right ones, and you got to buy it in the right place. There's some places where you should never buy rentals. But then there's other places where almost always prices rise, and it just depends on where you buy it. Yeah, we just bought it, Daniel. There's no mortgage. Yeah, I know about Algorand crypto. Yeah, they might have to hire a freaking attorney. Texas is great, and they're all like, Texas, you know, freedom. Yeah, no state income tax, but Texas makes it back on property tax for sure. All right, we're still dipping. Look how sideways we are, guys. Again, we're talking about investments right now because this is the price action over the last 30 minutes. It's literally nothing. We're the only, again, and I don't want to buy the lows or sell the tops because my luck, as soon as I buy the low, it's going to break it. So, are you rich? No, not really. All right, so look, there's the breakdown. We are starting to flush here. Look at this. Let's watch this support level down here. And what a lot of people don't calculate into it is like, again, I did this rental calculation where I would earn 15K net a year, right? But this is going to increase as the property value increases. So if the property value increases to 4,000, then in theory, we're going to earn $3,500 a month in 10 years. And then if you take away half of that, instead of making 15K a year, you're going to make 21K in 10 years. And then that's going to rise, right? So it's something that follows up over time as long as you buy it in the right place. You are rich and loving and supporting family is true wealth. Hey, thank you, man. We appreciate it. I try. I got a good life. I've got a very fulfilling life. I get to sit here and talk about the stock market all day. I don't really ever have to work again unless I really want to. I got a wife and kids, been with, you know, good family. Yeah, got a good life. All right, guys. We're at 280s. Yeah, so Nick, so whenever I calculate it, right? So again, like, let's say I earn $3,500 a month, right? When I do this, I subtract 50% of this for repairs, insurance, you know, whatever comes up. So I'm taking 50% off of the income that I get per month, right? So I'm taking 50%, right? That'll be enough for repairs and anything else, really. I'll probably net a little bit more than this, to be honest. But like, just to be safe, I take 50 off of it, 50% that is, and then calculate it using that formula. Versus, you know, a lot of people, they calculate it like, oh, $3,500 a month times 12, I'm going to be earning $42,000 a year. You know, yeah, you might, but repairs, insurance are going to take at least half of that away, usually. So it's not earning $3,500 a month. I just used a $300,000 property, right? And then there's something called the 1% rule. That means that you should try to earn about 1% of the sales price per month, which would be 3K here, right? But sorry, it should be 0.01 is the calculation. But I played it safe, right? And so I did 2,500 versus that, which is probably about right. $2,500 a month. You take away half of it, you make about $1,250 net times 12, 15K net a year. Yeah, that's about right, Tony. That's about what I did. The reason I got 3,500 is because I did it like this. %, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You know, so this is the net income that you're gonna bring in after 10 years. That's where the 3,500 came from. Was 2,500 times 1.03, which would be adding 3% a year in appreciation. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You know, it'd be about 3,500. Yeah, I mean, Tessie, I don't know. Ask your mortgage person. I'm not a real estate or market professional. I have no idea. Well, I have money in a trading account too. It's not about that. Like, this is all diversification, right? Like, you're going to have people that are like, oh, do this or do this with your money and do this. Again, the real key is diversification, right? You can buy real estate. You can buy S&P, NASDAQ, Dow. You can buy gold. You can buy some crypto. Like, you could buy, you want to diversify into, you could buy some bonds, right? Like, you can diversify into all these different things. And if you have a little bit everywhere, you're pretty safe, regardless of whether one corrects or another corrects. Generally, you're pretty safe. Yeah, you got to get good tenants for sure. Yeah, diversification is what it is. You know. Anyways, guys, so we're tapping. Look at that support hold. We drew this level. Look at that level, bro. We came right down to it. You know, as time goes on, I'm finding more respect for the levels I draw on charts. Because I just get a lot of confirmation. Even if it continues breaking down, it bouncing literally, like, look at that. Literally directly off of my level here. I got to have confidence in it. All right, guys, 15 minutes. Yeah, tenant selection. Is big for sure. All right. Yeah, real estate investment trusts make a lot of sense too, Ty. I'm not against them either. I just like to have something tangible for me personally, you know. And it's not about, like, for me, it's about location, right? Like, where I bought this property is almost certain to appreciate over time, right? And when you add on to it that I got a big discount on it, and I was very selective with what I bought. Like, I was very strict with how much I paid for it too. But when you calculate all of that into it, like, it's a good investment over time. You know, even if the market corrects, like, it's not about what the market does over 5 years. Like, people are saying, oh, it's a terrible time to buy rentals right now because what if the market corrects? It's not about that. It's about holding this thing for 10, 20 years, 30 years. And over that period of time, it'll pay for itself easily with rental income as well as appreciation. And so that's really what it's about, is sticking my money somewhere. Like, I'm a big believer in, you have to be calculated with what you do with your money, in terms of, like, you want to put your money in things that go up, right? And I want to be able to stop myself from spending money in irresponsible ways. And the way I do that is that as soon as I get large chunks of money, I stick it away in something, right? That way I don't spend it. If I keep it in my bank account and I stare at it, I might spend it. I'm pretty good at not spending it, but the point is, it's routine. Get big chunks of money, stick it away. Make it less liquid for me, right? Sticking it in another account that's not as liquid. If it's in my main bank account and I can just go buy stuff with my cards, I might spend it. And so I'm a big believer in protecting yourself from yourself, and like just sticking the money away, buying things that go up in value generally. Does it cost 10% to sell a house? Well, in some ways, yes. So, like, let's say you got a $300,000 property. So you're going to have to pay 3% to each side, right? So you're going to have to pay 3% to the buyer's agent, 3% to the seller's agent, right? So you're going to have to pay at least 6% of you're gonna have to pay about $18,000 to sell it, plus closing costs, right? Now that's negotiable, but yeah, you're gonna have to pay 3% usually to the buyer, 3% usually to the seller. But again, it's not guaranteed. Like, this is all negotiable. Everything here is negotiable. Not a real estate investment professional. I have no freaking idea what I'm talking about. Even though I used to be a real estate agent, my license might still be. I think I still have my license. It's just inactive right now. But yeah, so it's going to cost about 6%, I would say. It's not really 10%. It depends on how much closing costs are and stuff, but it's something like that. The big thing is, like, sitting on cash is risky. All right, sitting on cash is risky. Okay. Freaking property tax, dude, in Texas is ridiculous, man. Yeah, freaking unbelievable how much they're asking me to freaking pay for the rental property. Alright, guys. Anyways, we got 12 minutes left. 12 minutes. Market's still pretty flat. We broke down to the bottom of this range, broke down a little bit. Now we're bouncing back up over 275s. Palantir. Boeing had terrible earnings and still didn't drop that much, which is kind of weird when you look at Boeing. And actually, Boeing is up on terrible earnings. You know, one of the most common things, listen, ahead of this week's big earnings season, let's talk about something for a second here. All right, ahead of this week's big earnings season, a couple things you guys want to understand. The most important thing to understand about earnings is that just because a company has good EPS and good revenue does not mean they will go up. Just because a company has bad EPS and bad revenue does not mean it will go down. If you see a company report good EPS and good revenue and then you buy it and it drops 5%, don't get mad and say the market's rigged and it's manipulated or whatever it is. Because again, that comes from a fundamental misunderstanding about what this all means. Okay. Boeing, terrible EPS, terrible miss in revenue, gapping up to $185. A pretty decent percentage gap up as well. And so it does not freaking matter, right? It really doesn't matter. It has to do with so many more variables than just what their EPS and revenue was. You got to look at guidance. You got to look at what they've done in the last couple months leading up to the earnings report. You got to look at volume. You got to look at trends of EPS, guidance, revenue, all that different stuff. It's not just binary, good, bad, higher, lower. It's much more complicated and nuanced than that. And so please understand this ahead of earnings, because every single time, like an example is Tesla will have great EPS and revenue and then drop 6%, and people scream and yell and cry, manipulation. But it doesn't mean that. It just means that, like, there's a lot more that is being shown in the earnings report than just good EPS, good revenue. Yeah, new Treasury Secretary, Scott Bessent. He's going to succeed Janet Yellen. So Japan has a publicly traded company called Metaplanet. They plan to raise approximately $745 million to purchase Bitcoin. Trying to take they're trying to plan to buy up to 21,000 Bitcoin by 2026. They're kind of taking the MicroStrategy plan here. Yeah, if you really want to sit on cash, just buy bonds, buy CDs, buy bonds, buy treasury bond ETFs, you know, T-bill ETFs. Like, buy whatever you want. I'm not telling you to buy anything, just to clarify. I'm not telling you to buy anything. I'm just saying, if it was me and I was sitting on large chunks of cash, I'm going to stick it in something. I'm not going to get your mind out the gutter. I'm not going to sit on cash long term. It just makes no sense. Bonds are guaranteed returns by the U.S. government, and so I just buy bonds with it if I really wanted an easy 3, 4, 5%. I don't know about Rivian. All right, guys, 8 minutes. All right. Again, I'm trading on TopStep today, guys. So if you haven't already, check out TopStep. TopStep gives you a demo. They test your skill with a demo account first. You pass the test, they fund you. You fail, you only lose what you pay for. The big edge on TopStep is zero commission. No PDT roll in futures, zero commission on TopStep X. And again, I have been doing pretty well because of this lockout feature. I can lock myself out of every account that I have. And so again, I'm going to set this now, where I could set this to where if I lose over $200, it liquidates and blocks the account for the rest of the day. I think that's perfect. I'm going to save that. All right, now, if I lose $200 on any of my accounts, it liquidates and blocks me for the rest of the day. All right, this makes it so that I can't basically destroy my account on any given day. I'm going to do it again with my other. I've got about 3 funded accounts. We're green on 2 of them right now, flat on the other one, basically. But I'm going to do it on this one, too. Liquidate and blocks. Powerful TopStep X tool, because this allows you to retain most of your money. And again, TopStep gives you a demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. In this case, it's $50 for the base one. They're going to give you a 50K demo. You have to make 3K in profit on that 50K demo without losing 2K first, following their rules and conditions. If you do that, they fund you. If you fail, you only lose $50. There's no PDT in futures. Patterns are very similar to blue chip stock patterns. When I day trade futures, I'm day trading basically the NASDAQ QQQ price action. When I day trade the ES, I am day trading the SPY price action. The SPY follows the ES futures contract. Patterns are very similar to blue chips, and there's no PDT rule. TopStep is one of the most legit, if not the most legit one in the world. They've paid out almost $200 million in the last 4 years. They fund thousands of traders. Just been around for over 12 years. And if you want to check them out, I'll put the link up. They're an affiliate of mine. I am biased. I understand all the stuff on screen. You know, can't guarantee anything. You want to confirm it all with them. Not an investment professional. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. There's the link in chat if you want to check it out. And yeah, we'll see what the opening bell brings us today, guys. What's up, Tiny? I'm holding $1 worth of Bitcoin forever now. I think it's going to go to 200K by the end of the year, maybe. Fourth worst paper trader out there. Okay. With Bitcoin, from what most Bitcoin people think, it's all about accumulation. You just want to slowly but surely accumulate over time. I'm not telling you what to do. I have no idea. Bitcoin might crash tomorrow. But with Bitcoin, it's about accumulation. All right, guys, we have 3.5 minutes. Look at that bounce right there. That 275 support level held. We're now hitting the 200 exponential, which is right at 314s. You know who I never hear from again? Sometimes I'll cover economic data, and I'll be like, hey, and then some people will post it, and they'll be like, hey, this guy doesn't know what he's talking about. The data's already out, bro. What the heck? And then I'll be like, hey, you're delayed on stream. You're lagging behind stream. And then I just never hear from those guys again. It's never like, okay, you were correct. Thank you. Maybe I'm just mad. You know, how dare you doubt my channel here? Yeah, accumulation is what it is. Is the game of almost everything in investing. Dollar cost averaging is just that, accumulation. Whew. All right, guys. 3 minutes, 2.5 minutes. Do we have any? Oh, we got CB consumer confidence data at 10. I forgot about that. All right, let's see what we get. Wish me luck, chat. Honestly, my channel's grown a lot. Top 3 braggers in the world right now for my channel. But honestly, my average viewership is up a lot. Like today, we had almost 1,000 people here for durable goods orders. And durable goods orders did affect the market. But, you love to see it, is all I can really say here. Channel's growing, man. Like, we're getting more people for regular streams, too. Like, yesterday, we didn't have any economic data, really. And we had, like, 700 plus people here, which is great. It's growing, right? I'm only here for durable goods and BJJ. Hey, thank you, Igor. I appreciate it, bro. Thank you, sir. People get so mad when I talk about jiu-jitsu. It's like a passion of mine. I love it. I started a year ago. And again, I'm taking my blue belt exam this week. I'm excited for it. I'm excited, but I'm nervous. I've said this before. Like, I genuinely am nervous. And I almost, like, part of me is sad to put away the white belt because you get, like, white belt privilege, which is like, if somebody rolls with you and you're a white belt and they're a higher belt, they'll be a little bit easier on you because they're supposed to. Once you get a blue belt, that changes. Kind of puts a target on you and everybody starts, like, nobody's nice anymore. You know, they're just like, okay, this guy's a blue belt. He knows what he's talking about. Let me just destroy him now. And so I'm a little nervous about that dynamic, but hey, we'll be all right. It'll make me better, I'm sure. The cool kids hang out here. Everybody's doing it, guys. Hit the subscribe button. Try it one time. It might feel good. Do it now. Subscribe if you haven't yet. Where are we at now for subscribes? Right, exactly. I gotta stay a spazzy white belt forever. All right, chat. 10 seconds. All right, there's the bell. Let's see. All right, will we crash or correct today, guys? Let me know in chat. What do you guys think? Meta breaking highs up to 670s. Still continuing up a little bit at least. Again, we got to look at Tesla, Meta, Amazon. Google. Google down, Meta up. We got Tesla, Amazon, Netflix, Nvidia, Apple is the other one I'm forgetting. Look at Apple rip up, guys, at 233s right now. Look at that retracement. We're still at the support level here. Look at that drop. Wow. What's dropping? Let me see. Tesla. Tesla's falling, just broke lows. So it's dragging the market down. Amazon just corrected down too on the downside of the short term. Netflix is falling down a little bit. Meta's ripping up though. Google's starting to bounce back. Apple's flying up, which is kind of interesting dynamic here. I almost want to buy something here because Apple's pushing up so much against the rest of the trend, but look at Nvidia fall. Nvidia down to 120s, guys. I don't know. Actually, I retract my previous statement. It's looking a little too weak to buy up. Nvidia all the way down to 120, just bounced directly off of it. Yeah, well, in general, people are hopeful, right? Like, that's pretty standard. Like, people are usually hopeful. With a couple outliers, you know. But hope doesn't always translate. All right, Amazon rip it up. It's at 235s. Meta going up. It's at 673s. Maybe I should have bought. It depends on what Nvidia does here, though. Nvidia is testing 120s. It doesn't matter what everything else does. If Nvidia breaks down, the market's going to fall with it, I think. Yeah, we got CB consumer confidence at 10. We're not going to get a surprise rate cut, Corey. Again, and I mean, it's almost certain that we're not. There's a small chance that we'll get a cut. But the Fed almost never does anything outside of expectations like that. And so, you know, you don't want to find yourself where you're betting against like 99% odds. It's a sucker's bet most of the time, right? Now, there's chances that we shock the market, but like, you know, again, I've had people that every single FOMC meeting, they're betting against the majority expectation, and they're always wrong, right? They're always wrong. I'm not sure why people do it. I think they're just trying to be contrarian, but I think especially with Wednesday, tomorrow's meeting, it's literally 99. It's over 99 to 1 odds, and so I think this is one of those ones where it's just kind of silly to bet otherwise, right? It's going against something that's super, super probable. And so, yeah, there's a chance, but it's not a very high chance. I should have bought, guys. I should have bought that dip. I'm waiting. I can't really trade until 4 or 5 minutes at least pass. So I'm going to wait another 5 and see what happens here. Depends on what Nvidia does. It looks weak right now, though. Apple's the only thing keeping it from like really genuinely crashing down. Nvidia under 120s. I'm going to short. We'll take 2 contracts here. flat. See, the problem is Apple's still breaking highs though. All right, we took half off there. We took the rest off there. Just made a quick little 30 bucks. The problem, yeah, Apple's still breaking highs. So again, just made a little $30 there, give or take. Trying to trade with the trend, but we're gonna try to be patient here. We're gonna short this again, see if we crack these lows. We got a little $30 cushion here. Out again, just made another 20 bucks basically. So we are now up about 40 to $50 on the day. Pretty early, 5 minutes into the bell. Getting a lot of red weakness. Nvidia testing the previous closing price. So look at the previous close on Nvidia. It's at 118.40s. This is the level at which it closed yesterday, the red to green level on the day. So technically, Nvidia is still technically green today. If it breaks under this light blue line, it's technically red, right? So it's a big milestone level right now. Let's see if it holds. FOMC meetings at 2 p.m. Eastern Standard Time tomorrow. Tesla breaking lows again down to 390s. Amazon turning a little bit. Meta breaking highs again, though. Meta broke 674 highs. So we got a good little cushion on the day so far. Let's see if we can hold it. Part of me wants to buy this short term, but I'm not going to trade against the trend. I'm just going to wait just because I think Nvidia could bounce at this light blue line right here, previous closing price. And if that happens, I think the rest of the market might follow it. Although we are seeing weakness in a couple other big 7 stocks. Again, I'm waiting. I'm not going to do anything. I'm not going to buy it. It's trading against the trend. But I think there's a chance. It depends on what Nvidia does here. If Nvidia cracks just straight through this line, that's not a good look for it. And here it goes. Look at it. All right, so it's bouncing at least a little bit. Meta's now pulling back too, but all right, so we did get that bounce exactly where we told you guys we would. Look at Nvidia bouncing directly off of that light blue line, and then look at our support level here, which correlated with that line. We at least caught a little bounce. It doesn't mean it's going to hold, but we got the bounce prediction right. Let's see if it continues. All right, yeah, so again, we're still holding at this line. Look at Nvidia chop straight through that previous closing price, but Apple still rip it up. So we're kind of neutral, I would say, Mag 7 wise. Still got to wait. Tesla breaking down, so I think we do have more red than green right now. Just depends on if Apple could save us from down, you know, falling down further under 200 here. Yep. Definitely red. What indicator are you using to draw your levels? I'm drawing them based off of my own support and resistance calculations. Amazon's fighting back. Tesla's still really deep, breaking down at 230 or at 387s here, 387. So we're finally breaking under this level, but let's see if we retrace. Netflix is looking weak. Amazon's coming back though. Nvidia's still falling. Look at that. Big weakness coming through. Look at Nvidia. Wow. Look at the breakdown. I'm going to buy this. It's a little risky here, to be honest, but see if we could retrace back up short term. All right, we're out. We just made another little $20. Just some extension in how much we were breaking down is what we caught right there. Very quick little scalp. We're up about 60 something on the day. Yeah, look at Google, Netflix, Tesla looking weak, but we are starting to see some backups. Depends on what Nvidia does here though, chat. Yeah, market's getting kind of bloody right now, chat. Y'all just be careful. Still flushing down weak. See if it continues down. Feel like things want to bounce though. Let's see if we do. Yeah, so we're up about 150 in our other funded account too today. I like the support level. We're gonna try to buy this dip based off of it. Really easy risk too. Let's see if we can retrace back up. All right, another little gain there based off of that support level here. Up almost 100 on this one, and then we're up about 150 in our other one today. So green nonetheless. Look at that support hold, man. Again, one of the things that I'm realizing is that if I can document my levels every day, a lot of them have a big edge. Like, look at this. Like, we drew this yesterday. Look at that. And it's really like a wall of them right here, too, if you can kind of see all those. Literally directly off of my level again. So I got to keep following these levels. I'm not telling you to. I can't guarantee anything's going to specifically work for you. They're just giving me some confidence for sure. All right, guys, we got CB consumer confidence data coming out pretty soon here. Pretty soon. Let's get ready. Not the biggest report, by the way, chat. Not the biggest report, but still relevant nonetheless. So then why didn't you buy at support? I did buy at support. I'm trading off stream too, and I've got 3 funded accounts, guys, so I'm doing my best. Like, I'll show you. Yeah, I'll show you some of this. Let me find it. Yeah, so my main funded account, I'll give you my stats here so far for this month. So these are my stats so far on these accounts. Here's my net daily P&L so far in January. This is my January graph. So we're doing okay on this one. Pretty good graph. We've only had 2 losing days really, with a bunch of green sprinkled in there. So far so good. We'll see if we can keep it up. Yeah, I'm looking at confirmations. Sitting tight, waiting now. Good bit of profit today and yesterday. And then the other account that I'm on, let me show you. Let me see. Yeah, the other account, we're actually on a 4-day green streak here too. So here's the other one. Just to show you kind of like my last couple weeks trading. Honestly, since I built the system, it's going really well. Then the other one, which I think is this one. The other one, we're on a 3-day green streak. So we've been pretty accurate, kind of switching accounts. Again, the way I schedule this is I have a $200 max loss per day. And we just kind of keep attacking it. We're just being selective, so we're not taking like a bunch of trades. Again, watch Nvidia. Nvidia is the one you want to look at, I would say. Nvidia is what's influencing everything else. CB consumer confidence drops in about 10 minutes. And again, we are trading this on Top Step. Top Step's really nice because it allows me to like protect myself, to be honest. It's a powerful thing, man. I can actually like protect myself from trades Set a $200 max loss. That's a useful thing for sure. Amazon's starting to rebound too. And again, if you haven't already checked out Top Step, again, they're an affiliate of mine. This is like my third plug all day in 3 hours. And so, you know, shameless plug, shameless plug if you want to check it out. As always, guys, not an investment professional. I have no freaking idea what I'm talking about. I might be biased in a lot of different ways. Don't copy me. Not an investment professional. Not liable if you lose. Top Step's an affiliate of mine. But they give you a demo, test your skill. You pass the test, they fund you. You fail, you only lose what you pay for, which in the base one is $50. No PDT and futures patterns are super similar to blue chip stock patterns. The SPY and Q all follow the futures contracts that you can day trade on Top Step. No PDT restrictions. And the biggest edge in funding is, again, zero commission. So, like, look at this here. So I can make $9, $17, $16, $20, $7, $24. Zero commission, tiny amount of fees per contract. One of the most powerful edges in funding. And again, if you want to check it out, there's the link. Can't guarantee anything. Confirm it all with them, of course. You know, we attacked the downward pressure as we saw it, but now we're kind of starting to churn back up. Here's the previous closing price. So there's a chance we reject directly off of this and just go like this, I think. Right, here's the previous close. Right, here's the previous close right there. If Nvidia rejects this level, it's possible that the rest of the market turns with it, back down. If Nvidia doesn't reject this level and starts to creep up, I'd say there's a chance we start to do a rebound back up to this level up here at 275s. You kind of just got to wait to see what Nvidia does. So far, it's breaking over it, I think. It doesn't mean it's going to hold, but so far it is breaking over it. If you look at Nvidia here, it has broken over that previous closing price level. So we'll see. Yeah, it looks like Nvidia's ripping up past this. So watch this 275 level now, I think. Yeah, Amazon breaking highs too, ripping up fast. Netflix rebounding, Meta rebounding, Google rebounding, Tesla rebounding. Look at that retracement. I'm going to buy this retracement here, actually. No, I just scalped a little bit more. I like buying that retracement a lot of the time because it's going to fill that gap, and it did. Got out, though. There goes Nvidia. Pretty good accuracy today, though, man. I don't know what I'm running today. Today I am running... %. On one of them. What's the other one? 100%. Dude, I am running 100% trade accuracy in every account that I have today. And this is out of... How many trades have I taken today? 6 trades in one, 100%. 5 trades in the other, 100% accuracy. Cool. Hey guys, we got 7 minutes. If you want to check the description, you can see it, Lolo. Again, not an investment professional, not liable. If you lose, always make your own assessment. Trade responsibly. I have no idea what I'm talking about. Can't guarantee anything. Don't copy me. At this point, I'm just programmed to regurgitate some of these things. Hello? All right, guys, sorry. Yeah, so CB consumer confidence, not super high impact. I would say the market's probably not going to, like, move too much from it, but we'll see. We got 5 minutes. We'll see what happens. Yeah, 49 bucks a month is a good deal. And you have to think about it in terms of the general package that you're getting for it, right? Like 50 bucks a month, a lot of demo accounts cost the same. And this is like a souped up demo account that, in my opinion, biased opinion, of course, is better than a regular demo account. It teaches you more. It teaches you how to trade in a much more profound way. Teaches you how to follow your rules. Has safe falls to protect your account versus a lot of the other funded account programs. It just makes sense, in my opinion, versus funding your own account and losing thousands of dollars most likely. It just makes sense. But everybody's different, you know. All right, guys, CB Consumer Confidence, 5 minutes. I'm biased. I always try to tell people I'm biased for sure. All right, so look here, we went right up to that 275 level we talked about. Let's see if it holds. Nvidia still looks like it's climbing up though. That's some strength showing up. Let's see. Again, we're tapping off the level here. Now we're trying to break it. Nvidia's still climbing. All right, so we battled that level. We got over it now. Let's see if we continue back up. Here's the 200 exponential right here at 295s. That might be the next spot. I calculate my own, Tessie. All right, guys, we got 2.5 minutes. Yeah, so tomorrow's news is high impact. Fed meeting day, big earnings. And then Thursday, we got GDP data as well. It's expected at 2.5%. Friday, we have PCE inflation data. Core PCE is the big one. They are spot on. Thank you, Tessie. I appreciate it. Yeah, you can kind of see like we had this gap in support and resistance levels on my charts, and look at the swing back up we did up to this level. So here's the 200 exponential. We'll see if it holds. A lot of this is just driven by Nvidia here, right? Like Nvidia is moving up. Here's the 200 exponential. Here's the volume weighted average price on Nvidia. So this is all driven by this, mixed with like Tesla, Amazon strength, a couple other nuances from blue chips in the Mag 7. I don't know. We got a minute and a half until CB Consumer Confidence economic data comes out, so we're gonna take our time. All right, guys, here we go. We got 1 minute. Look, it rejected right there at the 200 exponential. Let's see what Nvidia does here now. But see, this is a little support level too, so, you know, I think 275 is worth watching. And look at the bounce right off of it. So Nvidia continuing to churn. The 200 exponentials right here, so we're kind of wedged in between these two. And then in 40 seconds, we have economic data come out. Yeah, there's the Discord if you want to join us. Got a lot of good members there. Yeah, sorry to hear, Blaze. All right, guys, here we go. 15 seconds. It's expected at 105.6, basically 106. Richmond Manufacturing Index dropped a little early, but CB Consumer Confidence 105.9. It drops right now. 104.1, lower than expected. CB Consumer Confidence 104.1. 104.1, lower than expected. Nvidia rebounding all the way back up, though. Look at this. We're starting to run into some of that big resistance levels that I have on the chart, but it doesn't matter if Nvidia keeps churning up. Nvidia is right at the volume weighted average price too. We react into this level here, but again, 104.1 versus basically 105.7, 106 expected. Lower than expected CB Consumer Confidence. Yeah, so lower than expected CB Consumer Confidence. Market's still churning up though. Nvidia fighting all the way back. It's now over the volume weighted average price. It's at 120s now. Fighting its way back. Next level I have is 322s, 323s. We'll see if it continues. Is it good? Lower CB Consumer Confidence might mean higher likelihood of rate cuts. I still don't think the likelihood is high, but it's just a higher likelihood of rate cuts, if that makes sense. Looking at the Fed Watch tool, still 99.5% expected here. So I don't think consumer confidence data is going to influence it much. All right, so again, next level I have is 322s. We just tapped 322s. Still charting, though. That's a big green candle. And that's a very strong candle. A lot of stuff started to bounce back. Netflix, Amazon, Tesla, Meta, Google, all bouncing back here after drops this morning. So a lot of stuff, it's fighting back here. It wants to come back. They're expecting a pause tomorrow. No cut, no change, Maria, in the rates. All right, next level I got is 344s. We're just kind of ripping past all these levels, which shows genuine strength. Now we're up to this one. I'm going to short. Short's kind of obvious, though, but I'll take 2 contracts. Took half off already. Got the last half. Just made another $20 or so here. Green streak's still alive. Look, I'm going to go ahead and cut it down. My OCD's just starting to, like, claw at me here. No losing trades at all today. Every single trade I took today was green. And this really goes to show, like, I talked about my edge all for the past few weeks. My big edge is after the opening bell. If I document levels, use them to base my trades around, and then only trade 5 to 6 minutes after the opening bell. Again, I didn't lose today at all on any account, and I traded multiple accounts. Yeah, we're up. Yeah, we're up hundreds today at least, which is good. No losses. We took 26 total trades today. 0 losses. I'll show you guys the actual number of trades. Again, we took 16 in one, 10 in the other. Oh, wait, that's... Oops. Yeah. 0 losses. I'll take it. Green is good. I'll take it. No losing trades yet so far today. I'm probably just going to shut it down and then accept my winning trades. We're up almost 300 today. So I'll take it. It's good. I'll see you guys later. Y'all be good. Y'all have a great day. Again, if you want to check out Top Step, of course, links in the description. I love you all. You'll have a great day. Yeah, we'll see you guys tomorrow for the big day, the FOMC meeting. Tomorrow, guys, just to put this into perspective, tomorrow is the biggest, most volatile day markets have seen in a minute. It doesn't mean it's necessarily going to be volatile. Sometimes days like this are choppy. But tomorrow, just to put this into perspective, I'm going to hype it up real quick before I shut it down. Tomorrow, guys, we have... we have ASML, which is AI stock, PGR, Progressive, T-Mobile, General Dynamics, Teva, Pharmaceuticals, NASDAQ, MSCI, Danaher earnings in the morning. We also have, hold on, let me make sure this is right. We also have the advanced trade balance in goods and retail inventories tomorrow. We have the FOMC decision at 2 p.m. and the accompanying press conference at 2:30. And then after the FOMC meeting, we have Tesla, Meta, Microsoft, IBM, and more earnings. Western Digital and a bunch more. So this is one of the most catalyst-filled, potentially volatile days the market's ever seen. And with recent volatility that we've seen in the market, tomorrow is an incredibly interesting day, chat. You probably want to pay attention to tomorrow. We're going to stream every bit of this tomorrow. We're going to be streaming basically all day tomorrow. We're going to be streaming morning, Fed meeting, earnings reports up until late tomorrow evening. Be ready, guys. Hit the subscribe button if you haven't already. Try it one time. It might feel good. Everybody's doing it. I have no freaking idea what I'm talking about, but subscribe anyway. I'll see you guys tomorrow.